Hey everybody, welcome to Mortgage Today for Thursday, February 1st, 2024. And oh, what a day it was. UMBS opened up the day up 3 basis points again. My Groundhog's Day or something here. Bonds were remarkably calm overnight considering yesterday's movement and the fact that a month-end trading played a role. The calm continues into domestic hours this morning with modest gains after a slightly higher jobless claims number. So jobless claims came in at 224,000 on a 212 forecast. It was 215 previously. Continuing claims came in at 1.898 million versus 1.840 million. It was 1.833 previously. The U.S. labor market has defied economists' forecasts over the last year despite elevated interest rates, but there are signs of cooling. Fewer people are quitting their jobs than at the peak of the pandemic recovery, and the recent high-profile job cut announcements from companies like the United States Parcel Service may be early signs that unemployment will pick up in the coming months. Weekly claims tend to be volatile. The 4-week moving average, which helps smooth short-term fluctuations, increased to 207,750, marking the biggest increase since November. If the Fed cuts rates, it risks reignition of inflation as mortgage rates fall and home prices rise. We do have a record number of apartments under construction, and that should put downward pressure on the rental component of shelter inflation. The New York's Community Bank, the parent of Flagstar, fell 38% yesterday as a loss and dividend cut. The company also acquired Signature Bank last year during the regional banking crisis. It boosted its provision for loan losses, and the Street is taking this quarter as sort of a kitchen sink earnings release, which is when a company that is reporting bad news decides to release everything negative all at once. This often supports better earnings going forward. That said, the dividend cut was bad news. In other economic news, non-farm productivity rose 3.2% in the fourth quarter, and the labor unit costs rose 0.5%. This is good news for inflation. Like I said, initial jobless claims rose to 224,000 today. Announced job cuts surged in January, according to the outplacement firm Challenger Gray at Christmas. Waves of layoff announcements hit U.S.-based companies in January after a quiet fourth quarter. As we step into 2024, the landscape is shaping for stabilizing prices in anticipation of falling interest rates. We also got news that Keller Williams has settled its side of the Sitzer-Burnett Commission lawsuit for $70 million, which is way down because, this was 3 parties were committed to paying $1.8 billion. So the fact that they took $70 million is pretty big on this. However, this is only one of many lawsuits that are coming. At one point this morning, 10-year yields were close to breaking into new 6-month lows. By the 3 p.m. CME close, we had to settle for the lowest yield since December 28th. The gains arrived rapidly just this week with concerns over the regional banking sector causing a semblance of the drama seen in March of 2023. This has arguably been a bigger consideration for rates than the week's economic data. If we include Treasury supply updates, we could argue the data is playing a small supporting role at best. As such, Friday's jobs report is now the first, last, and only potential market mover for the rest of the week. UMBS closed the day down 3 basis points at 101.42. So 101.42 puts us up in this new range right up here. So that puts us above that Fibonacci line that was served as a pretty strong ceiling going back a couple of weeks and previously was a pretty strong floor. So that line has been holding pretty strong as a technical indicator. So we'll have to see if we can hopefully stay above it. We also got a couple posts from our sponsor at wellthatmakessense.com. We got from our Yeah But series, should you have a CPA that writes everything off? Check it out on there. And then also we got a post from No Excuses by Brian Tracy. This is a great book where it talks about using self-discipline and removing all the excuses between you and success.